Yeah, I was not recording. Okay, there we go. So, all right. So yeah, the bias is coming from the daily chart. As you can see, it's a retracement of this push up. So I'm anticipating price to get at least to the 13 EMA or to this broken zone, right? Then H4 price bounce off a supply zone, that gray area there visible from H1 right here. So now I'm anticipating short-term reversal. Where can the price reverse to? If they're going to reverse, they will most likely reverse into here. So remember, these guys already entered, which is perfect at the top. I entered late. I just got home now and I saw price here. So I entered. My position is within this candle here, somewhere on this candle. So if price is to retrace, I do have an order block here. Since this is the lower high, I have this also a lower high here. But in terms of today, this is the high right here. So we've got a lower high here, which makes this a peak. Price also bounced off yesterday's low to make this a flip zone sell. So probabilities of sells are actually high. It's only a matter of figuring out where price will most likely retrace to. So on this impulsive move as well, I see a fair value gap right here. So the fair value gap I'm going to use this zone here. Okay, this is where price can potentially retrace to. So we'll just see. They can either drop, of which we already have positions, or they can retrace, bounce off here, or retrace, bounce off the FVG here, and drop. But for now, it looks like we're actually in motion. So let's see how this plays out. But besides that, I'm really keen on seeing this price go lower. So this is also a point of interest. The current lows of today, if we can get a break and a retest here, we can also scale in here because sometimes price will just accelerate, right? So that means they will not come back here. They will not come back here. So if they break and we see them respect the current lows here and bounce off, remember we also have a zone here. We also have a zone here from the day before yesterday. This is the low. Without even looking back, this indicator already shows us that this is a low. So that makes this area here a zone. Let me just this area here, from this area to this area, it's a zone. So you can just mark this candle as well. So if we can break here and do this, that will be perfect. If we can break, come back below, come back above and tap into the order block, that will still be perfect. If we can still come back to the fair value gap, that will be perfect. So in terms of TP, where can price most likely get to? Price will most likely get to the zone I mentioned around 46.40. We can get to the 200 EMA around 46.90. This will be my TP for the day, 46.90. If we can get to the 200 EMA, that'll be perfect. But what I've noticed also is sometimes price will run before they get to the 200 EMA, we'll get a retracement, then we'll get a continuation to the TP area. If we do break and retest, then definitely we'll get to the zone. So for now, bias bearish. If we get a pullback, we just scale in. We already have positions and runners in there. So that's perfect for C500. Then going to C1000. Okay, C1000, the reason why I was skeptical on trading it yesterday, let me explain. So if you're in yesterday's session, you realize I mentioned that price might potentially just push up to certain points of interest at the top here. That's the first thing. Second thing is we've taken out this liquidity here, and most likely we could see a reversal happening long term. This is a trade idea, right? Based on how the daily candle closed, I cannot look for sales here. This price will most likely get to the 13 EMA. Those who like to buy crash can maybe look for buys, but personally, if you follow me, I only sell the crash. So I don't have it set up here until price taps the 13 EMA on the daily. That will be around 54.85. So 54.85 is a point of interest for a short-term sell. Why I'm saying short term is because this could be a reversal, like I said. So we might just get a few spikes, then price might continue on its merry way going up. So 54.85 is my point of interest for a short term sell. If we do get a pattern there, that's on the 13 EMA. And I can also consider sells if the daily candle turns bearish. You remember I also mentioned the same thing yesterday. C5, we actually didn't have anything yesterday. But what I realized is, you know what, prices moved quite a lot. But soon as the daily candle turns bearish, I'll be looking for sells. So that's exactly what we did yesterday. And we came up with a nice sell on, excuse me, on C5. So same applies to C1. If the daily turns bearish, we might still get a short-term sell. It's still short-term on C1. All right, so C3, I also realized yesterday they ended up dropping. They actually melted with no reversal. So this is the thing with C3. So remember, we were waiting for them here and we were waiting for them here. So what happened is yesterday the price didn't get here. They started dropping. So if you had mapped this as a high and maybe this is an order block, this is a level, you could have maybe scalped a sell in here or maybe scalped a sell in here, but there was no clean retracement. Let me specify that. The only thing which would have made us sell is the bias. We were steady trading below the 13 EMA, which clearly showed that price was in a sell motion. So you could have scalped a sell on this one. So today, what are we looking for? We've broken this zone. Can we get a retest and a drop? That's possible. We have a level here, which is an order block. If we jump to the daily, you'll see we've got nice sell motion. You can see this is the sell we wanted from here, right? We wanted a sell, never came. We wanted a sell on this candle, it never came. We wanted a sell here. That's what's happening now. So since we've got a sell bias on the daily, we jump to H4 to look for a supply zone. Okay, so I've got this order block here at the top, which is also in line with the fair value gap. That's the first point of interest. Then as the price is dropping, do we have any visible fair value gap there? We do have this one. This is balanced. We also have a fair value gap here within a zone. So since we've got a fair value gap within this zone, I would say if price can retrace to this area, I'm definitely looking for sells. TDI, I'll be looking for something like a baseline bounce type setup for a sell again right there. Then you saw that red line I put on H1. I want to see price trade above that area. You see there, that's an order block, right? But I want to see price actually maybe spike up above that area, maybe come tap into the gray zone, maybe come tap into yesterday's low. So how do we see yesterday's low here? I don't think this one shows. I'm just going to put a solid line. Okay, solid line, that's yesterday's lows. So yesterday's lows are on 27.65. If you were up, this was your trade. Price is in a sell motion, that's number one. We start the day by dropping, we leave an order block. The order block is lining with yesterday's low. We get a nice rejection candle on the 13 EMA, that's a sell. Whether it's short term or long term, that's a valid sell. So any touch on the 13 EMA can also be a valid sell, just depending with how you understand how price will be moving. So from where price is now, I would rather want to see them come up here, then create like a high, then leave an order block, then I can look for a break, potential retest, then we can sell. That's the pattern I'll be looking for here. So I'm going to leave C3 on H1 so that we can monitor. What could also happen is price might just drop. But if they just drop here, I won't really have an entry because my trading system, I've realized I kind of struggle with entering trades like this. You see such an impulsive move. There's no clean pullback here. So to enter here for me is a bit risky. because I feel like price will still want to retrace. That's the reason why I wouldn't want to sell if price just, let's say we just fall from here. Yes, the setup will be there, but based on my trading system, I won't be comfortable. But if you understand how price is moving and you just want to take your sell, you can still take it below this level if price doesn't come back up here. But I would love to execute if we come up here and show a pattern, then I'll definitely be looking for sells. Let me just jump to C5. Okay, we anticipate a pullback there. Let's wait for one. Should I leave it on M15? So if you're on PC and you're waiting for a retracement, right? Let me just give you a tip. Once you see price retracing, you want to play around all the time frames you have. You want to play from H1, you want to use all the time frames you have available. So you want to use H1, then you want to check 20 minutes, M15, 12 minute, 10 minute, 5 minute, 3 minute, 1 minute. Those are the main time frames I check. I check these time frames for reversal patterns or a candlestick which is familiar. Let me explain. So let me go to the 10-minute chart, for example. So if I jump to the 10 minutes, let's say price starts to retrace going up. We are retracing, retracing, retracing. When we get to this zone, I'm now looking for a nameable candle, a candlestick with a name. It has to be a doji, it has to be a pin bar, it has to be a bearish engulfing, it has to be an inside bar. Those four main candles. If they paint on any time frame, whether it's the M3, M5, M15, sometimes M12, but not really, M10, M20. Those are my favorite time frames when I'm now actively stoking a pair. So if any nameable candle shows itself and I already have a bias, I'll simply execute the first position, number one. Then I'm going to wait to see if there's a follow through to confirm the sell, or price still wants to extend, maybe get into the zone. I'll still be looking for the same candle. Since I only have one position, then I'll manage that one position. I won't close it. I'll just manage it accordingly. Then if we get another candle here, I'll enter position number two. But seeing that we already have runners here, so that will be let me clear this. This will be position number two, since I already have a position. So if we get a pattern here, I'll enter position number two. If we show motion to the downside, I scale in. If there's no motion to the downside, I'll watch how price reacts to this area. If there's no reaction here, I'll cut my loss to these positions and I'll wait for something else. But if there's something here, then I'll enter position number three. Then as soon as we confirm motion, I'll scale in, then I'll let it run. So that's another tip which I just thought I should share with you in terms of scaling in and entering a trade which we will be actively stoking, especially with the buyers. All right, then going to be B1000. So what happened with B1000 yesterday? I did not share the signal for two reasons. I had already shared C5 and it was in motion, and I had already shared B5, which was still playing around. So when I saw B1, I didn't share the signal because most people end up over trading. So I was like, you know what, let me not share this. But I spoke about it after I mentioned my entry. And if you really wanted to trade it, I'm sure you took this buy because this was a simple break and a retest of an order block here, and it simply played out. Before we continue talking, we could actually get a short-term buy here. Let me quickly check H1. Okay, H1 is about to close as well. This will be a bit of an impulsive trade. The daily chart has no clear direction here. If you notice, we're still trading within this range from yesterday and almost the day before yesterday. So in terms of a bullish bias from the daily, I do not have a bullish bias. That's the first thing. H4, I've got nothing there. H1, I've got something. This can work as a pattern. If you're not scared of B1000, you can enter one position. Just one position for now. Because why one position? Because the daily has got no bias. It might actually uh, move like yesterday. So let me quickly explain yesterday's setup. I've entered one buy position on current market price. I'm just open to seeing this price may become tap into this order block and continue pushing up. If you jump to M5, you see this pattern looks like they could actually push up maybe to around 14,740. That's a potential target. At the same time, I just want to pay attention to here. They might hit here, then drop. They might come here, then drop. But otherwise, I'm still leaning on a short-term buy. Why am I buying? This setup is almost the same with yesterday. So I'm going to start by explaining yesterday's setup. So on yesterday, what you notice is, again, we didn't have a buying bias here. I remember when we looked at B1, we were looking at a retracement and for price potentially come lower, right? So when I came to the chart, I was just browsing my charts while it's waiting for my C5 to move and my B5 to move. And I noticed TDI showing me a tight W pattern right there. The H1 was in motion already. I think it was somewhere there or somewhere here. So I noticed there was this W pattern. For me, with screen time, with trading for a long time, I've seen this play out before. So I won't lie, my first entry was impulsive. Just after seeing something which is played out or repeated over a period of time. As soon as I saw that, my first entry was impulsive. I entered one buy. Then I jumped to M15 to see what I can use to confirm the buy. So on M15, I realized first thing, price was trading on the previous day's low, yesterday's low. This is where I actually entered, right? So price was rejecting yesterday's low. You can see we bounced off. We didn't break any order block. So from here, we had no buy. From here, I noticed we've broken an order block now. So two things were going to happen. Either price was going to push up with me, or they were going to drop with me and retest the order block and yesterday's low again and push back up with me. So what ended up happening is price actually spiked a little. I added again. They spiked a little. They closed above. I added again. Then I targeted this area. You can see I wasn't greedy with the setup. That's one thing I also want to specify. When you enter a trade, do not be greedy to say you want to catch the whole move. That's why maybe some might say, why do you always aim for 30 pips? Because most of my trades, you hear me say 30 to 50 on most trades, unless, of course, maybe I decide to hold. But on average, this is my pip range, 30 to 50 pips, right? You'll be wondering, why does this guy always go for 30 to 50 pips? It's because through screen time, I understand that for whatever move which is happening, I can comfortably take out or extract 30 pips without stressing much. Instead of somebody who's waiting for 100 pips, the 100 pips might never come. You get it? So I aimed on this one. I think I ended up getting about 60 pips, if I'm not mistaken. Because you know, B1000 when it decides to move, it moves. So if you notice, I actually took 70 pips here, but some of my positions were scale-ins. So they ended up getting maybe lesser. But my first position, it took a clean 60 to 70 pips. And that was my setup. So I took this impulsive move and I closed right here on the first level, right? Price decided to pull back, bounce here, so you could have bought here. If you're scared to buy here, you just wait for an order block to be broken. Price comes to the order block, comes back below, then they break it here. So from here to the next level here, how many pips is that? If you check your pips and you see that it's worth it, that's 60 pips. If it's worth it, there's only one thing to do, execution, and that's it. So same applies with the trade which we just took here. Going back up here is 35 pips, back into the zone which was broken. You can see price actually respected the zone. They actually retested it here, right? So that's my target. If they do decide to go up, that's fine. But if I can get 30 pips there, that's perfect. You see, I can call it a day. So hence, I took one position there. So the setup for today is the same thing. Price is bouncing off yesterday's low. Liquidity has been taken. This is the order block. Broken, retested the next order block, broken, retested the next order block, broken as well. So chances of this price getting here, based on how I trade, they're actually high. So let me actually see. It's almost 10 on 10 pips in blues right now. So I'm just going to leave it and monitor. But at the same time, I do not want to lose anything more than 20 pips on this trade. Remember, we're just targeting 30. It's pointless for you to target 30. Then hold this price if you see it pushing down and hold until here. Rather close it there and wait for them to come bounce off here again, then re-enter. It's pointless to target 30 and end up holding 70 pips of loss. This is hustling backwards. All right. So points of interest, this level, I'm still open to seeing price bounce off yesterday's low again. That's a possible play, right? If you look at TDI yesterday on the M15, you can see this is how I backtest. If you see these arrows, it's me who puts these arrows manually, even this one. That's just me backtesting. Even the notes, I love to put notes on my charts. So type W on TDI equals man. Just as simple as that. You try to trade something familiar. If there's nothing familiar, then you do not execute. So on B1000 today, it's just this trade. If we get here, that's a successful trade. But I'm open as well to see price maybe come bounce off here and even attempt to hit yesterday's low again for a short-term buy. But remember, the daily chart is bearish. If the daily chart is bearish, you do not want to hold your buys for too long. I hope that's clear. If there's any questions, you guys, you should feel free to ask. So that's my view there on B1 today. Then jumping to B5, the famous B5. If you follow me for too long, you know me, I don't like trading B5. It needs a person with extra patience. What was my reason for buying yesterday? I think we bought here. My reason for buying was just this. You see this candle here. I did not buy here. I did not buy here. I did not buy here. But when I saw this, I was like, you know what? Here the candlesticks were not really convincing. They were not really convincing. But this, nah, let me buy it because price is most likely going to push up to around 63. I think my TP was 63.36, if I'm not mistaken. I was targeting about 40 to 50 pips on this trade, and my stop loss was around 62.55, if I'm not mistaken, which was most probably below this zone. So price ended up coming back, pushing up, coming back, pushing up again. Then eventually they broke, but they didn't retest the top here. They decided to come and retest the order block. If you see, there's an order block there, this candle here. So they broke, retested it once, twice, thrice. Again, this is also a zone, right? So if you're following price, or rather, let me put it this way, you might hear somebody say, I only trade one thing. When a person trades one thing, it's easier for you to monitor price candle for candle. This will mean that even if you had closed this trade here, even if you had closed a loss and you were following price, you would have realized that no ways, man, this is an order block. As long as price does not come back here, we are bullish. You can see here we're respecting this order block here, right? Right. We create a high here. This is yesterday's high. Price breaks again and bounces off. So it's either you enter here or you enter here. There's multiple opportunities to enter if you're trading one asset. But if you're trading 10 things or 20 things, how do you follow candle for candle? You end up going crazy. So sometimes it's always good to limit your assets, or just have a few assets which you watch. So if you follow me, you see I only trade what you see on the bottom, of which I don't trade this every day. I'll pick something with a high probability and I'll stick with that for that whole day. If it's a loss, it's a loss. If something which I would have put to the side moves and I miss it, that's still fine because my trading plan for the day will be saying I'm supposed to trade asset A. If it's saying I'm supposed to trade asset B, I follow asset B. Either I'll get a trade, a win, small win, big win, break even, small loss. Your trade should never be a big loss, right? So that's how you keep pushing forward. So that's it for B5. So I think I closed it. Okay, I held this overnight. I closed it way. When I woke up, I think price was somewhere here in the morning. I closed Perfect trade there. So today, what are we looking for? So today now, this price is bullish. Perfect. And if you also followed yesterday's session, I'm sure you heard me say, I want to see how the daily closes so that I can trade today. Right. So the daily close rejecting the 13 EMA, which gave a bullish bias from the onset. From the time today opened, we were bullish. If you notice, H1 is also confirming that. So one thing I'll tell you, you need to understand price action. You need to know your candles. Candlestick Trading Bible is there on the YouTube, on my YouTube channel. If mine is confusing, you can read the book by yourself. If you still struggle, you can look for somebody else. There's many guys who explain Candlestick Bible in different ways. So that's one of the best books if you want to understand candles. So price will most likely trade into this red line here. Where is this red line coming from? It's probably coming from like Monday or maybe Sunday. Um, let's see. Okay, I'm going to extend this zone. That's on 64.70. 64.70. I just adjusted it a little bit just to round up, but that's the target where price is most likely to get to, right? So once you know where your price is going, now you're looking for points of interest to buy. And the first thing always has to be a retracement. Never chase price to buy at the top. Yes, they can push up, but if you buy here, remember your stop loss is to be outside the range. This stop loss here will be about, it's actually a lot. I cannot even count it for you. It's a lot from enterprise to this low. That's 70 pips. Who the hell wants to hold 70 pips of loss? Unless, of course, your account is big and unless, of course, you're targeting something more than 70. But if you notice now, the target here is just 47 pips. So from this 47 pips, if we can get 30, that's perfect. We start looking for a point of interest where we can get our 30. Prices already bounced off here, meaning the probability of them pushing up from current market price is also high, but it would have been best if we entered right here. So from entering here, your stop loss will come from here. As price moves, this is your last low now. You can put it here, you can enter here, you can enter here. You can see now the risk is less. So right now, where can we get a retracement? Maybe somewhere here. If price can retrace to around 64.10, I'll be active in this trade. Why I'm saying 64.10 is because price looks like it's already bounced off here. The worst thing which could happen is price coming back and bouncing off here again before they push up. So from 64.10 to 63.95. 63.95 is my last limit, and my stop loss will be right below the last level on M15, which will be 63.90. 63.90 stop loss, 64.10 possible entry, 63.95 possible buy limit, stop loss 63.90. TP I already showed you at the top there, 64, 65. That's still perfect. So that's how I'm viewing B5, and I'm just going to leave it here because this looks like it's a trade which is already in motion. So already you can see the relationships with between the time frames, waiting for the daily chart to paint whatever it wants to paint and executing. So once you knew how the daily close here, for those who are early birds or those who sleep late, you could even started trading this early morning here and you could have made your pips. By here, you could have been done for the day. So this looks like will be a continuation up. An entry for me here is a bit late. Why it's late? I know B5. B5 can be just frustrating. So I would rather wait for an optimal trade entry rather than to jump into a moving trade. So that's my view on B5. I hope everything is crystal clear, guys. So B5, you can see B1 is retraced to almost on the entry. And the way M15 is closing, it looks like it could be a rejection. So if it's a rejection, what could happen here? What could happen is price might actually retrace back to this area here. So I'm going to close my open B1 position at entry point. If they spike from here, that's fine. It will be a miss. But let's look for entries at 14. 14 14,690, because you can see on M5 there's a bit of an order block slightly above. Then 14,681, also a possible zone. Where does your stop loss go here? Stop loss is to go to around 14,661. That will be the best stop loss. So if your stop loss can go below this level, this is M5. That will be perfect. So we are waiting for a buy around here, and possibly we're targeting this area as a TP. That's it for B1. Then C5 actually spiked a bit now, still playing around the same area. So I'm not really sure if they want to retrace or they want to drop. So I'll just maintain that one position I have. If they decide to drop without us, that's perfect. But here's the thing. If they get here, I'm going to close my one position right there. I'm going to close it. Then I'm going to use that profit on any other position I'll take on C5. Uh, this helps in terms of risk. I cannot really go into details, guys. This will be part of mentorship. This is part of mentorship. This is part of trade management. Let me try to give you a quick example. Let's say this price drops up until here and you've entered this with 0.3. Then you get 20 pips. 20 pips is $6, right? So now instead of, let's say your risk for the day was, let's say $10. So now your risk for the day is literally increased by 6, right? And it's now 16. So instead of having $10, I've boosted up my risk to 16. So now it means on the next position, if it's a high probability, my chances of getting a higher profit are now increased. So now I can use the whole 16 as a risk, or I can risk the whole $6 on one position only. Then I can still risk the 10 on the next position. This is a way of maximizing profits. So if you guys want to understand more about this, you really have to join mentorship. That's where I can explain this, because with mentorship, as I trade, I'll be explaining what I'm doing and the reasons why I'm doing it, and you simply be taking notes and you use those notes for future reference. So that's it for C5, C3, we've spoken about it, C1, we've spoken about it. So V2501S, let's see. I don't think I'll trade it today. I won't really talk much about it, although it looks bearish. I'm left with 4 minutes here. 4 minutes is a bit rushed for me to explain these three assets, but I don't think I'll take trades there. Step index. What it ended up happening with Step, we were bullish yesterday, if I'm not mistaken. On this part, they ended up dropping all the way back to this level. Then they started pushing up. They left this order block. If you notice, I marked this. So that's a point of interest for buys, number one. Then I think that's my only point of interest. If I'm going to buy, I need to see price tap into this area, then I can buy. If there's any different view, I'll advise in the group. Then J10 also had a buy yesterday, but what I realized with J10 is this is also something which you really need to pay mentorship for. So how do I explain this now? It's even hard to explain. This was my point of interest for a buy. But when I came to the charts, I realized that price actually created the pattern here. They retested, TDI confirmed with the baseline bounce, and the move was in motion already. There was no way they were going to come back here. They had to complete the move. So I just marked an order block and I marked this level into the future just to see what would happen. So they came, they broke this, and they bounced off this, another buy, right? So every level you mark for that day, just extend it into the future also, and you definitely find ways to make use of it if you've missed the setup. So because of time, 2 minutes left. This is it for today, guys. If you guys have questions, please drop me the questions on Telegram. Drop me the questions on Telegram. But otherwise, we are actively stalking on B5, B1, C5. Okay, so for me, it will be B5, B1, C5. Those three are my assets for today. So it's C5, B5, B1. Those are my assets for today. And I'll just keep stalking on these and see what I can get from the markets. So thank you so much, guys, for making time to join. It's a holiday today, but you see, with Deriv, we can still trade. So if you're chilling and you're trading, I'm sure we'll still catch a good setup today. If there's anything else, I'll share on the Telegram group. So thank you so much, guys, for joining. I'll be with you on Telegram, though. I'll just freshen up a bit, then I'll be on Telegram. I'm sure we'll catch one good trade. All right. So thank you, guys. Thank you for joining. This video will be posted on YouTube just now. Enjoy the rest of your day. Good trading.